Good weekend, all. Ira Epstein of Linn Associates, and yeah, I'm back from Mexico, and it is Friday, the 12th of November, 2021. So this is your weekend edition, and we'll look first at, give you an idea of a one-monthly chart, and then everything else will be the weekly charts to get a better view of what we think's going on right now, longer term. Now, the one thing that I noticed when I was gone, all the talk for a week has been centering on is inflation transitory or not? I'm in the camp that it is for the most part. I realize not everything will be. You give somebody a higher wage, that's going to stick. But fuel prices don't necessarily stick. Grain prices don't stick when they stuck themselves up. Metal prices are sticking, don't stick. You know, those things are market force prices. Then you have to ask yourself, where are we in the supply chain and what's that going to have? What happens as we fill that? So what happens, and this is what I walked away with over my 2 weeks. To get the supply chain unclogged, you got to fill it. Sounds funny, but you got to get people back to work. They got to make the goods. The goods come in. Then that gets sent out. Now, I understand that the ports are full. That is not a sign that we don't have goods. We do. So now how do we get them out of there? Well, you saw that our Secretary of Transportation's trying to make it easier for truck drivers to work with that. The federal government's allowing some of the Fed funds to make more temporary lots around the port so they can move things away from there to get everything off. You got to find a way then to get it off the ships, from the ships into the distribution systems. Then we start getting away from that supply chain issue. This could take another 6 months, but I do think that that's the reason the Fed is sticking, and other banks are sticking with the idea that this is still transitory. We'll see. That's where the argument is. When we look at the S&P on a monthly chart, the one thing you can't argue, new all-time highs. So here we are midway through the month, right? We're up 1.77%, but it's a constant. The market just keeps making higher highs. For the week, we were down 0.25%. So if that's the correction, I'm not that impressed. We've had bits of breaks every now and then in this, and they come back and make highs. And until that pattern ends, and I pointed that out when it was occurring, and I thought this would occur, we're there. I want to go on record. I still think you're going to get the Santa Claus rally. I haven't changed my opinion about it, and some will say, isn't this it? No. Last I looked, this is November 12th. This isn't the Santa Claus rally. When we look at a weekly bar chart with the highs, lows, close, you can see how the market has taken off, and you had an inside week. Okay, that could be a pause and an extension of this, but you've had a pattern of a lower low, higher high. Should the market take out 47.1175 and not close lower on the week but higher, that would suddenly give you higher lows, higher highs, and a resumption of that bull pattern. So when I look at the 18-week average of closes, why is that important? That's my line in the sand. When I look at it, it filters the swing line. So if the swing line has a trend and it's bullish, if the market is over that, that's another part that says, yes, you can go with it. If you don't have a trend and you're over it, and I don't think you have a trend, I'm not blind. I see the market has gone to that new all-time high just a week ago, and I do see we're staying over that. So I know that we're trending in that sequence, but this is what I'm looking for, these higher low, higher high patterns, because what they do is they get the traders excited with them. A lot of systems look at that. When I take a look at the Bollinger Band, and that's interesting. I was in Mexico, I think it was Thursday morning. I joined John Bollinger in a seminar he was having in London. Can you imagine these time differences? I'm in Mexico, this before I think the time change kicked in. I was dying during that when they went to when they went to Pacific Standard Time, and I had to be up 2 hours earlier than Chicago. It put me down. And the one thing I do is I record for my subscribers when I'm out of town. So my paid subscribers, when I'm gone, I record for them. I was up every morning putting out those updates. They miss nothing. They missed it if in the written updates I wasn't going to read all day and write. That I didn't want to do. But as for the trade style, what to do on the charts, I was there. But it was interesting. And they asked, somebody asked a question, hey, John, Ira Epstein, and he gave me credit for that because I had him on the show many times, and it was the history of it. And he talked about what I teach in my enhanced Bollinger Band course. He uses a different indicator with Bollinger Bands, but he uses a timing indicator as I do. And I was very impressed with that. I like mine better than his. That doesn't mean he didn't create it. It doesn't mean I can't make a better mousetrap out of it. But when you look at the market, lower low, higher high, still riding that band. And what's the importance of a Bollinger Band? You will stay within the market 95% of the time. That is the important part of the market. Do we understand that? You can step out of it here and there, but the way the algorithm is built, that's what it'll do. John said that he had built it because he was trading options and he wanted something to pull it back in, and he was using that to do it. And he explained how he came about developing it. He also talked as I do. There are different ways in what he uses with this instead of some arithmetic averages or other numbers to go to exponential. I did that years ago in some of mine. And you find ways to get more in tune with the market, in my opinion. I do that with my slow stochastic study. But in any case, lower low, higher high, riding that band, that's still a bullish sign, but I'd like to get that other part. And here's the negative to that. Let's assume the market does hit it. Well, if it's over the upper Bollinger Band, you can ride it, but staying over it, the odds are you're going to pull back within it. So you're in an interesting resistance zone in the market. That's the best way I can say it. In terms of momentum, so we look at the slow stochastic. For the week ended, as of today, both numbers were over 80, and both were, let's see, last week, over 80 as well. That's very important. What about the week before? No. So are we going to embed? It takes 3 weeks over of both numbers over an 80 reading, the K and the D lines, to make that up to embed. When you embed, two things happen. Number one, it says that you've locked into a bull trend. Number two, it tells you that if the red line then loses that and closes under 79, that more of a correction is in store. So you get two stories here. Do markets embed a lot? Well, this market's been tending to do that. So you don't want to fight City Hall. Most markets don't, but stock indices have been a son of a gun this year. It has been a phenomenal year to be long. You can't argue that if you do. Where have you been? When you look at the Nasdaq on a weekly chart, just overbought into big resistance, cannot kick anything that gets me excited up there because it can't embed. Am I bullish? I have a bullish bias. Momentum's up and overbought, and you're at a key resistance point. In the Dow, this has got the trend up. Higher lows, higher highs. Now, the market had an opportunity last week. You broke out to the upside and you closed in the top quadrant. I believe a real breakout occurs when you get over an upper Bollinger Band for two, let's call this a weekly chart, 2 weeks in a row. You make a higher high than this week and you close in the top and close in the top quadrant again with a higher gain. You didn't do that. So this market is paying very much attention to the resistance up there. Overbought. Yep. What about embedding? Well, take a look. This was November 5th. This is the 12th. Both numbers over 80 today. Both were over 80 last week, but not the week before. So that's two of the markets that are in an overbought area. In the Russell, again, you failed to get a breakout. So all you did is you get up over the upper Bollinger Band, you pull back. That doesn't mean you can't be making a base of all this and go higher. I think you have to treat it that you've made a base in all this and that the market is working its way higher, but you have to respect that you're overbought at a key resistance zone anytime you can work down. But in the market, I still think that the big support's going to be in this one at the 2258.50 area. In the 30-year bonds, well, what you've really worked out in doing is going from the upper Bollinger Band to the lower. You challenged the 200-day average in gray and the Bollinger Band without a trend. Higher high, lower low. You've gone back to neutral. It sort of fits in with what people are trying to figure out what's going on in the curve yield, because we have the 30-year doing one thing and the very short-term rates doing a whole different thing. You see part of that in the 10-year when you've got lower highs, lower lows. That's bearish. Momentum is oversold. The bias down, trend down, should the market get hit. and decide to go further, between 129.09 area and 129.27, I'd look for the support to come in. The 5-year note even shows you a different picture, but I'm leaving these on as they are. Then we go to the dollar index, which managed to close over the 200-week average, the 100, the upper Bollinger Band. It's got 1 week out of the Bollinger Band to the upside. I think the market's saying doesn't want to break out, but we'll see if I'm right or wrong. You've hit a lot of target numbers here. You had a correction. I'll show you this. Went down, made your run towards the 18-day average, came back with a vengeance, followed through a bit now for the past 2 weeks, and it could be that you go into a slight stall right at that zone. Eurocurrency is going to be the flip-flop. You have lower highs, lower lows under the lower band. I don't think you're going to stay under that very long. Oversold, not embedded. How many times do we have now under a 20 reading? This week, last week, the week before. You are embedded. I said not. You are embedded. It was that one that you weren't. So when the red line, now this gets to be interesting in learning. When that red closes over 21, it'll be a signal to me you want to make a run back to this 18-week average of closes. In the meantime, aggressive selling, I think. I used that word aggressive, gave it a new adjective here. The 200 and the 100-day average, I think that's going to be strong resistance in this market. In the Canadian dollar, again, you got up. If you follow the momentum, you got overbought, you were challenging the upper Bollinger Band, and now you're sort of rolling back into the neutral territory. That's the importance of these bands, that you look at what they're doing. Are there averages by them? Where are they? The trend is up. The risk in being long, though, on a weekly chart, if you buy it here, and I do think the pros are buying it there, is a big risk. 77.53. The resistance is, again, the upper Bollinger Band. You're risking more in this chart pattern than you can make. I'm not in love with that. In the Japanese yen, you have a pattern of higher lows, higher highs. Bullish. Momentum down. Is it embedding? Both numbers were under 20 this week. Same last week, but not the week before. If they embed, we'll see what happens. Then I get even more bearish. But right now, got to prove that it can embed. You've had the correction back inside the Bollinger Bands. This is when you stay out of them. Now, just follow. I was looking at this earlier, too. So if we take a look at this, you were in the band there, but out of it. Week 2, out of it. Week 3, out of it. Week 4, out of it. Then you start turning it, and that's the normal pattern. You rarely go beyond 5. It's a good sucker bet at a dinner table. Tell somebody, oh, I think that on the 6th day it's going back into the into those bands. You're going to win a lot of dinners, a lot more than you're going to buy. Go count and do your own thing, and you tell me what you think. All right, so that's a good thing. I use it at times and I'll order big. When you look at what's going on here with the Bitcoin, so Bitcoin stayed with both numbers over 80. Let's get to the week before. There they are. Week before, both over 80. Week before. We've been embedded here. And I've been telling traders that I think that, yes, profit taking's coming in there, but on breaks, as long as you keep that, I'm friendly. Now, if that red line starts getting under the 80 level, you want to back away from it. You don't want to get too aggressive here then. You could be getting a correction that comes in at any point. This market's had the benefit of Tesla sales, as you know from Elon Musk. Traders thought that he's going to put a lot of that money into Bitcoin. I don't know why they're thinking that. Where the money's going is to his taxes. If you understand how many options he has that he has to pay a tax on, you'd understand where the man's at. He's only worth $286 billion, I read this week. He sold, nearly $6 billion, as I understand it, in Tesla stock as of this morning. And a vast amount of that money is going to have to pay for the tax on those options from the stories I've read. I'm not his accountant. The differential between Brent and WTI, look, it got up to difference here, then it pulled back. Okay, what do we see in Brent? Well, you still have the embedded reading, but the market is definitely weakened. It will take very little for this to lose the red line under 80 and for prices to fall back to this 76.86 level. I think you have to be on warning about that right now. Until you lose the embedded reading, it hasn't occurred, but it won't take much for it to occur, so keep your eye on that. When you come to WTI crude, it looks a bit stronger to me than that. You've got an 84 reading here. You got an 83 in the Brent, so that is a point difference. But both of them, if you take out that low there and this on the Brent, I'd get nervous about the market and I'd be studying what is it doing. I'm not getting bearish per se, but I could if you get under the 18-day average of closes on a settlement basis. When I look at the gasoline market, you have a lower low, higher high. When it was up here and I was still in town, I told you, I think the pros are coming out. I don't think you do a heck of a lot of driving at this time of the year in most of America. And I think prices pull back. But I do think you start turning on the heater, so natural gas gets interesting to look at. By the way, look at how they wiped out natural gas. Look what they did to heating oil today. And this is because the idea there is that OPEC Plus is giving more oil. I know in Europe, it appears that Russia's turned on the spigots there to help people a little bit. But remember, they're still getting big prices. We thank them for giving us back $80 Brent, right? We are at, 82 Brent and $80 WTI. We did add more rigs today on the Baker Hughes count. Now, one of the things you heard me say was when I go out of town, I'm really loyal to my subscribers. I got some people that wrote me when I was gone telling me they can't believe that I do what I do, and I'm not patting myself on the back. You pay me, I'm going to give you what you pay me for. In the futures markets every morning for those traders, and futures and spiders, I'm going to cover the 40 markets that I do there. And on the ETFs, I'm going to cover 40 that go hand in hand with it, both on the weekly charts, the daily charts. They're going to get that from me, and I put those out first thing in the morning. So while I'm gone, you're not blind. I'm doing just what I do. How do you give this a try? You go to our website. Under the word research on the very top, just click on it. All of this explained there, how you get it done. It's the simplest thing that you can imagine. With that, I want to thank you for watching. It's fun to be back. I'll see you come Monday. Take care now.